Hi everyone and welcome back to Grumpy Monkey Trading. My name is Michael. On the show today we're doing a BananaRama, so we're taking Cramer's Mad Money Lightning Round stocks and we're doing a bit of technical analysis to see how his comments compare to the stock charts. We'll see how many I do. I will probably do a few fewer than I normally do. That is because I'm feeling a bit sick, so we'll see how long my voice holds out. On Friday I did an improv comedy tournament for charity and lost a bit of my voice, came out feeling a bit sick, but had a lot of fun. We raised some money, so that's super cool. So yeah, let's start the show. Goldman Sachs GS. Kramer says, Goldman Sachs, are you kidding me? I love it. The thump, the thump, the thump. The book value is 176, and that's ridiculous. I think it goes to 210. Well, 210 sounds like a crazy overstatement, but it's actually pretty reasonable. We were there not too long ago. June, of this year. We were up around the 210 level, so that's not crazy. We should be able to get back to there. 176 is basically this support line. So you're basically saying that in the short term you have 210 as your high and 176 is your potential low. I do think that there's some warning signs in terms of this bearish engulfing candle, as well as the potential for a head and shoulders pattern. So head, shoulder, potentially another shoulder, which could lead us down below this support line and into this territory. If so, I think that would be an incredible buy opportunity. Obviously, Goldman Sachs is very stable and has a good, stable business, so certainly something that you can definitely look into. Chesapeake Energy, CHK. Kramer says, too risky. Don't like the balance sheet. We've got plenty of them with good balance sheets. We don't need to go down the food chain. And I would tend to agree. We actually had CHK on the program a couple months ago, did the analysis then. I actually owned it then. My analysis talked me out of owning it, so doing it for you guys is actually beneficial to me, and I sold it around $8. It is now hovering around $6. I sold for a loss, so I am happy. Sometimes you got to take a loss to basically not endanger your portfolio further. Down to $6. This is a nice example of a descending triangle. So we have this basically solid flat line here that was broken with lower highs, and that is called a descending triangle. It typically breaks into the direction that that flat line maintains. That's also true on the high side. So if you have a flat line and then higher lows, that's a positive indicator. So CHK, I'd stay away. Sun Power Core, SPWR. Kramer says, I'm staying away from solar right now until I see Sun Edison bottom, which I don't know when is going to happen. By the way, I would be a buyer in First Solar first before I would buy this one. So I can understand that. We've had a huge drop, bearish engulfing candles, fairly significant volume, at least in the past week. We're resting on a critical support line right now. Really don't want to break that. However, there are some encouraging stochastics which indicate that we are quite oversold at this point, so we should get some sort of reversal this current week, at least to stay within this channel, which would be positive at this point. But certainly maintaining that barrier is going to be critical. I certainly don't see much upside. You're basically potentially going to just sit in this channel for a little while, so cautious. Johnson & Johnson, J&J. Kramer says Johnson & Johnson is good and going higher. I have to tell you, my charitable trust sold it too soon because they wanted to divide out some money for Allergen, but J&J is okay. And I would say, yeah, J&J is okay. It's kind of like one of those dating situations where you're like, yeah, she's there and I don't have anyone better, so I might as well date her rather than dating no one. J&J is not the something better. J&J is the plain girl. You can see that very clearly in the chart. I mean, we have some very big flat lines here where we haven't done a lot for like a year and a half, and the only thing that we've really done is go down or slightly up. So really there's not a lot of interesting things here. Those are both a pretty powerful resistance line and a pretty powerful support line. So yeah, like the 3% dividend is nice. That's about the only nice thing I can say about it. And isn't that sort of what you do in those dating situations? They're really nice. Merck, MRK, Kramer says, you've got J&J and you've got Merck. I've got to tell you, I think Merck lags J&J. They don't have that extra growth that I like to see. I would never tell anybody to sell Merck, but I don't like the product profile as much as J&J, which means that we had the nice girl who we would date, and then we have Merck, who's basically Hortense the mule face girl that nobody ever invites to parties. Looking at the chart, though, things are a bit rosier for Hortense than you would expect from Kramer's comments. It's in an ascending triangle pattern. It is butting up against this support line. If it were to pierce it like it did before, that would certainly be a very bearish thing, and you would not invite Merck to the prom at that point. However, if it can maintain that line and stay within this channel, then similar to CHK, but on the reverse side, it's an ascending triangle. So presumably it would pierce the upper part of that at some point in time, certainly a little ways away. It does have slightly better yielding dividend as well at 3.39%. So yeah, something to consider. She may not be as ugly as once she did appear. American Airlines, AAL, Kramer says, my order here is that I like Delta, then I like Southwest, then I like American. Us redheads always coming in third place here. So we have an ascending chart. It is lightly ascending, which is nice to see. It has a small dividend, which is also nice. But nothing really too surprising here. Potentially the danger of a head and shoulders pattern. So we have a shoulder ahead and another shoulder. So we could be falling down. If it were to break this support line, that would certainly be very concerning. There are some challenges to the airline industry coming. Once fuel prices start raising, that would be a concern. But it looks fairly safe and stable at this point. So I would keep an eye out for it. If it breaks above this line or this line, that would be, to me, what would be considered a true breakout. So right now we're just sort of bouncing in the channel. CELG, CELG. Kramer says, a lot of people felt that the Revlimid number was a little bit shy. My charitable trust does not own CELG, but boy, is it ever getting tempting at perhaps below 110. Why? Because they bought that Receptos, and I think they are going to really reap the benefits. It's just not happening yet. If you listen to Kramer's show, he often talks about CELG and Receptos. He is very much a proponent of theirs. So let's look at it from the perspective of when potentially, if this was a positive stock, would you want to buy it based on the recent decline? Kramer says below 110, but is that really a resistance point or a support line? And I say no. That is a big engulfing candle followed previously by another big engulfing candle. I think we're headed certainly into this territory, with the low side being about 95, potentially a little bit higher than 95. 100 or 105. Those will probably be each stopping points. And at that point, you want to look at the volume. You want to look for hammer candles where it basically plunges low during the day, but it recovers at the end. That would be a nice sign of a reversing candle. I certainly think it has a bit more ways to go. And if you believe in it, there are better prices ahead for you. Certainly, probably in the next week. So we can keep an eye on this one. All right, everyone, my voice is dying, so I am going to tap out for today. I hope you enjoyed the show. Please subscribe, please like, please comment, please offer feedback on things you liked and didn't like for the videos so I can make them even better than they are currently. And I look forward to seeing you again next week.